Welcome to the Small Business Show. My name is Swire from Garuda Promo. In this episode, we have Morvareed Salehpour, business formation and contract attorney, and also Joe Croft, cross CPA and associate. How you doing, guys?
Good.
Doing all right, thank you.
So I wanted this show, and since I have both of you on, and I think it will be a good episode. We are dealing with a pandemic right now, and I think a little trend that I see, a lot of people are get laid off, or they basically don't have a job right now, but a lot of them actually wanted to start their business. So I know, Morvareed, you deal with a lot of formation of business, and Joe, you help business set up the corporation properly. So Morvareed, a question for you first. So I have this $1 million idea I always wanted to do. Can you give us a brief walkthrough of setting up a company properly? How should I consider? Should I be a proprietor, a corporation, or LLC? Can you give us some advice?
Well, I'll give some general kind of educational tips. As an initial matter, it's a discussion you should be having with both your legal counsel and your business CPA, because there will be tax consequences as well in regarding to what form you structure as well as where you structure. For example, there's multiple franchise taxes you may have to pay. And in terms of legal, it'll be a discussion with your attorney regarding the short and long-term goals. So I go to a discussion with my clients, what are your goals in the next 6 months, the next year, 5 years, 10 years down the line. That way we can choose the appropriate business entity depending on what you're trying to do. They have different costs and benefits to each one. For example, if you're going to set up a sole proprietor or a partnership, that is something that is more easily set up, and you don't have to register with the Secretary of State. A little bit less cost of getting up and running, but you do not get limited liability. So you're personally liable for everything that can go wrong with the business. While if you set up a separate entity, such as an LLC or a corporation, you do have the limited liability protection, but there is a little bit more work and cost involved with setting that up. Additionally, picking between LLC and a corporation will also depend on the business goals. For example, whether you're meaning to get investment and when you're actually seeking investment within what period of time.
Okay, same question to you, Joe. Like, when do you work alongside normally with attorney like Morvareed? Like, how's that work? Like, when should I go to the attorney, and when should I go to the CPA?
Sure. Well, and actually, I would kind of say it depends on the individual. Kind of whichever their first choice is to go to, whether it's their CPA or their attorney. I would say kind of depends on where their relationship is stronger to go to one first and then the other. I always advise clients that I talk to who are looking at forming a business to definitely go find an attorney that specializes in that and understands that world. I honestly tell people that if their CPA is offering to prepare that for them, that they should probably consider looking for another CPA.
Wow.
I don't believe that CPAs belong in the legal world. That's a personal opinion, I suppose. Obviously not shared by all CPAs, but most that I know, that's kind of where they come from. But yeah, she's absolutely right. There are different ramifications legal-wise as well as tax-wise. Sole proprietors pay all the taxes themselves. LLCs, it kind of depends. It's a little bit of a mixed bag. If they're a single member LLC, they're basically treated as an individual for tax purposes. If they incorporate, or if they're a single member LLC and choose to be or elect to be taxed as a corporation, then they have that option for tax purposes, where they're now on a tax return, they look like a corporation. And then corporations themselves have their own tax rate. Currently, it's pretty favorable, 21%, and we have that for about another 5.5 years before the tax laws potentially change, or at least as of now are set to sunset at the end of 2025. And so it kind of depends on where their goals are, where they want to build their equity, what they plan to do with the entity when they're done, whether they're going to retire, move on, pass it on to the next generation. There's a lot of questions and answers involved there.
So I guess from hearing from you, is a team effort.
It is, yeah, it is. And I want to, point something that Joseph said, that any CPAs that are kind of engaging and trying to form businesses are, one, not not able to really do that appropriately as they're not a lawyer, and two, engaging in the illegal practice of law. So I would not be, that's a crime. So I would not be engaging in anyone who is not a lawyer who's seeking to give you legal counsel is not protecting your interests.
Okay. And I think the normal question that people will ask is, I haven't made any money yet, so I have to obviously, speak to your attorney. There's a fee, I need to hire a CPA, another fee, and so many other fees. So is it better to get this done once I'm profitable, or maybe at least make some money to do that? Or do I really have to get it down right before I even start open the door to do business?
You have to budget for this from the beginning for both tax and legal. I mean, you can address a lot of these issues from so you could do some cleanup work later, but it's more costly. There's certain things you can't clean up. Like there was someone I was talking to last year, and they'd been operating for a year and a half, and they hadn't talked to an attorney before then. Their business model was bribery. So they'd been operating a legal business that they hadn't realized that was time and effort and money into something that wasn't actually something you could grow. So it's important to be having these discussions and involvement early. If, with my clients, we can work it out where we prioritize. And so if there are certain things that need to get done right away, we can do that. And then if there are things that are less important, we can put off, but you do need to be doing this. I mean, you can't be asking others, if you're looking for investment, for example, you can't be asking investors to invest in a business that is full of liabilities and holes. And, I've seen that and dealt with a lot of founder disputes. That founder agreement is very important. That's not somewhere to skimp. So these are issues which actually show you have a real business and you deserve to be invested in.
What about you, Joe? What do you think?
Yeah, no, I completely, absolutely agree. One of the things from a tax perspective, the sooner you get your tax return going, then the sooner, let me back up a little bit. Most businesses in their first year probably not going to be profitable. And for tax purposes, totally okay. Typically, if you're a corporation, those tax losses can be carried forward to a future year, multiple years, depending on what their profitability is in the years that come. And those losses can be used to offset those taxable profits and reduce their tax liability. Ultimately, then that means from a corporate standpoint, they can pay less taxes. If they're an individual or a pass-through entity, if they're actively involved in their business, which typically as a business owner they're going to be, those losses pass through their personal return and then offset some of their other incomes that they may have, and again, reduce their taxable income and thereby reduce their tax liability. So, as soon as you have an idea or someone out there has an idea and they want to start operations, it's okay to incur costs. That's going to happen. The IRS code, the Internal Revenue Code, allows for $5,000 of write-offs in that first year for purposes of getting an attorney, getting those articles of incorporation set up and filed, or articles of organization, depending on the entity, as well as the accounting costs and so forth. Costs beyond that can be capitalized, and then they can be depreciated over a period of time. So, there are things that they can do early on that it may be a little bit costly. They may need to get some money on their own, or if they choose to incorporate, they can go get some investors. But there are some things they can do that will be beneficial to them in the future if they file that first year.
Okay. So what about, I want to hear your thoughts. It seems like, the attorney and CPA like yourself work as a team. But obviously there are a lot of online platform over there. There might be template that you say, I've seen them too, like we can get you set up with a corporation with $100, just fill out this forms and you'll be done. And what are the benefits or disadvantage of using that? Obviously, cost-wise, it's very low cost, but then how would talking to an attorney like yourself and a CPA would benefit a small business owner?
So I've seen most of the time I have to do cleanup work, right? Anyone who goes and use something like LegalZoom ends up, those documents are not specific to their business. They're not appropriately drafted. It's just a cut and paste. So whenever you are using something that's cut and paste, it's not going to be really protective or sufficient for your specific situation. So it ends up, again, leading to that costly problem down the line where you have to significantly revise. Like I see, for example, just even recently, a situation where, they had done a operating agreement from one of these cut and paste kind of websites. It's missing key terms regarding, what happens when someone wants to leave the business. So those are key points that need to be included from the very beginning.
What about you, Joe? What have you seen so far?
Yeah, so kind of the same, and there's self-help is exactly that. It's you're helping yourself. So whatever your degree of knowledge is, that's about as good as your document's going to be. The same is true in the world of accounting. QuickBooks is a very popular tool out there, but folks who feel they can do it on their own with little or no accounting background or knowledge oftentimes find themselves putting transactions into accounts where they really don't belong. I regularly see, for folks who aren't familiar or comfortable with accounting, they get a loan, and in the world of accounting, that's debt that shows up on your balance sheet. A lot of folks misconstrue that, and they get their debt, and it shows up as income because it's a credit in their accounting system. And so, if it's a credit, it's got to be income, right? No, it depends on what it is. If it's income, if it's being generated through sales of their operations. Otherwise, it's probably debt or potentially an investment, which then it would show up in equity, but still on the balance sheet, not on the income statement. So then I've as well find myself doing a lot of cleanup for those businesses who are trying to do it on their own and don't really understand what they're doing. And it ends up being a lot more work than they anticipate on my end as a tax preparer to make sure that their accounting records are in the shape they should be so that we have an appropriate amount for taxable income.
So in other words, for both of you, I think it's you might save in the beginning, but then you're actually paying more for the cleanup work that you might both of you might have to spend more time, and then that's more billable hour clean up the mess at the end.
Yeah, and it often can result in litigation. So now you're stuck in court for potentially, usually years, because litigation takes a while, and you're spending lots on legal fees, and you're going to most likely end up settling the case. So someone's going to end up having to pay out something in settlement as well. So,
well, for right now, the entire business world has turned upside down due to the pandemic. For the brave souls out there that are really thinking about starting a business and moving forward for the next, I would say, year or two, what are some of the trends, rules, or laws that you guys see that you wanted to point out for would-be potential small business owners?
Sure. I mean, any typical problem is making sure that they are always, have appropriate agreements in place with all their vendors, with their clients, and with their employees or consultants. Those are very important. I've seen a lot of situations arise there where, for example, someone had cut and paste some agreement with their clients, and it ended up being a situation where he wasn't actually obligated to be paid by his clients, and his clients had taken advantage of that. So that's his revenue stream had been messed up at that point, and that's not good, right? Similar situation, not having the appropriate employment kind of agreements in place. I've seen employees run off with, intellectual property and
right, yeah,
trade secret information. So that's very important to, make sure those agreements are appropriate. And additionally, if you are, I personally think all businesses are really tech businesses now because they deal with data and are connected to the cloud. So you need to talk to your attorney and analyze how the new California Consumer Privacy Act applies to you and how you can be compliant.
What about you, Joe? What do you see?
Yeah, sure. So I mean, right now, I mentioned earlier the corporate tax rate right now is 21%. Prior to the tax law changes that started in 2018, corporate tax world was paying upwards of 35%. So folks who are considering starting a business, a C corporation right now is actually a fairly attractive way to go. Individual tax rates are ranging from 10 to 37%, although lower than they've been in the past, but still higher than that corporate rate. So that's something that I talk with my clients a little bit about, is to explore. A lot of people immediately want to go to the S corp route, allow that income to pass through to their personal return and then pay off of that. In the past, I was definitely more favorable. Right now, these days, it really depends on what else the owner has going on in their tax life. If they have a lot of other revenue streams that are raising their taxable income to higher rates than 21%, C corp might not be a bad way to go for a bit. And that's something too later on in the corporate life, they can talk with their attorney and look at the options of how do we legally change this to an S corp. That's something they can do in the future. Take advantage of those lower rates if or when they change.
Okay. So definitely very important because before you guys can advise what entity or structure a business can do, you have to understand what they're trying to do. As Morvareed is saying, what are the employment situation? Are you dealing with a commodity, or are you going to have intellectual property trade secret, in your company? Or like Joe said, are you already having some money coming in, or are you just starting from scratch? So what would be a good resource for would-be business owner to reach out to?
Sure. I'm on LinkedIn under my name. I'm also on Instagram under Salehpour Law. And my website is salehpourlaw.com. You can reach me through any of those. And I post kind of legal tips on my LinkedIn and my Instagram that, kind of trying to educate people about what are the issues they need to be aware of when they are forming and operating their businesses, so they know when they need to go to an attorney like myself to seek legal counsel.
Okay. How about you, Joe? How should people reach out to you?
Yeah, so for me, the easiest two ways to get a hold of me are a little bit old-fashioned, I suppose. My cell phone number, I'm going to put that out there. It's area code 909-670-2417. And so people can reach me on my cell phone. The other way they can reach me is through my email, which is Joseph, Joseph, @croftcpa.com. I'm a little bit new in the world, so my social media is getting up to speed. But those right now, email and cell phone, again, a bit old-fashioned. But you call, text, or email, and I'll answer.
Thank you so much, both of you. And we got some good information today. So reach out to the expert and don't just do it by yourself. Thank you.
Thank you.
Thanks.
I agree.